Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Calculating your unemployment insurance benefit amount isn't a one-size-fits-all process because every state handles it differently, but the core concepts are similar across the country. The entire calculation hinges on a period of time called your base period. This is typically the first 4 of the last 5 completed calendar quarters before you filed your claim. For example, if you file in July, your base period would likely be the entire previous calendar year from April 1st to March 31st. Your state's unemployment agency will look at the wages you earned from covered employment during this specific time frame. Once they have your earnings history, they use a formula to determine your weekly benefit amount, or WBA. The most common formula is the high quarter method. With this method, the state identifies the 3-month quarter within your base period where you earned the most money. They then take a fraction of that amount, often 1/26, to set your weekly payment. So, if your highest quarterly earnings were $13,000, dividing that by 26 would give you a weekly benefit amount of $500. Another common method calculates your benefit as a percentage of your total earnings over the entire base period. A state might, for instance, calculate about 1.2% of your total base period wages to arrive at your weekly payment. Some states use an average weekly wage method, where they average your earnings over a certain period and then give you a percentage of that average, usually around 50% to 60%. It is absolutely critical to understand that these formulas, the percentages used, and the definition of the base period are unique to each state. You must visit your specific state's Department of Labor or Unemployment Agency website to find their exact calculation method. Furthermore, every state sets a legal minimum and maximum weekly benefit amount. No matter how much you earn, you cannot receive more than the state's maximum weekly cap. This cap can range from a few $100s to over $1,000, depending on the state. So, to figure out your potential benefit, you need to find your state's specific formula, gather your wage information for your base period, and be aware of your state's minimum and maximum payment limits. Thank you so much for watching this guide. If you found this information useful, please give this video a thumbs up and consider